Let's get into conversation with Gautam Shah, founder at Goldilocks Global Research. And Gautam, hi. Morning. Thanks so much for your time. First up, Gautam, give us a sense on where do you think the Indian equity market is headed, given that we've been in a lull for such a long time now. Do you believe we're headed for a fresh breakout? Given on the fundamentals, we have a boost coming in from the government, a tax boost coming in, so much is happening. On the tariff front too, we seem to be firm with our decision on Russia. So with all of these tailwinds at play right now, where do you think the markets are headed?
Good morning. I think lull is not a bad thing in the kind of environment that we've had in the last 6 to 12 months, because we've had a lot of problems to deal with. And in this environment, if the Nifty has been range bound, I think it's a big win for the bulls. Support levels have worked every single time. Liquidity has played its part in protecting the market. And it seems as if most of the negative news flow is now behind us. But I am firmly of the opinion that the government has really put out a master stroke this year. Early in the year, in terms of the budget, the money that came into the hands of consumer on account of income tax slab changes, and then this GST development, and with the RBI governor, doing just about everything in favor of the economy and markets, I want to believe that people are trying to join the dots. The dots are not joining at this point of time, but I think the shift between demand and supply usually takes a little bit of time. I think we are on the right track. The market setup is looking inherently strong. We just need a price action confirmation. 24,850 for me is the first important resistance number. We are at the doors of that number. Once that is cleared, I think 25,000 is probably your final hurdle. And once that number is cleared, I'm quite confident that we should see the Nifty approach the lifetime highs of 26,200 and join global markets in doing well and staying in a bull trend. So I'm not really too much concerned about the market or the recent underperformance. I think this is a great stock pickers market. A lot of sectors and stocks are setting up well. Support levels are safe. One should stay committed and look to buy even at current levels.
Gautam, other than approaching that all-time peak, when do you think we'll have a decisive move beyond the previous high, just at an index level firstly?
Well, if you ask any market person, whether are you happy with markets at lifetime high in an environment where everything in the world is already at lifetime high, look at US, look at Europe, look at many parts of Asia, I think people will take it because we are still one of the most expensive markets in the world. We still have our own challenges on the economy and the consumption factor, and the FI selling continues, despite all the positives that have come up. So honestly, for the index itself, if we can get close to lifetime highs and stay around it, I think that itself is a big win. However, for somebody who's planning this market for the next couple of years, I want to believe that we can test levels of 27,500, which is a working number from a more longer term perspective. But I think it's not about the Nifty anymore. The last 3 years was about the Nifty and the index and the large caps. I think it's really about the mid caps and small caps and specific sectors. So forget the Nifty because that will keep you demotivated, at all times. Focus on sectors, and I think you should be sorted for the next year.
Exactly that, Gautam. That's exactly what my next question is. What is your sectoral taste? Because I'm reading your report right now. What looks good to you is auto and metals, but banking, you believe, is in a turnaround mode right now, something that you're not very positive on right now. While the common perception has been that large private banks or banking overall has been a safe space for quite some time, but that trend seems to be turning. Gautam, what's your take on your sectoral approach and also banks in particular?
Well, over the last 4 or 5 years, since the time we bottomed out at the COVID lows and we started running up, I think what we've noticed is frantic sector rotation and market cap rotation. We've always had one set of pocket of winners over a period of, say, a couple of quarters, and then that pocket takes a bit of a rest and the other pockets do well, which is very good for any bull market. So I think in the current scheme of things, auto, which I think is driven by the GST developments and the fact that it's coming out of almost 1 year of underperformance, is our top pick. And I do see the auto index moving to lifetime highs. In fact, we maintained this stance for about 6 weeks. In fact, the charts gave you an indication even before the GST news flow in some sense, and that's the beauty of charts. So auto, I think, is a top pick, and I think all the top stocks could appreciate between 15 to 20% from here. But I think the real dark horse, which I've been maintaining for a while now, is metals. I know fundamentally you might not be able to build a case, But last week, we saw an excellent breakout on the charts. I think the metals index is preparing for a run towards 10,200 and 10,800. A lot of the top stocks are setting up beautifully after a lot of hard work in the last 1 year. So I think they will also come back, and I think market men should be looking at committing there. Banking has respected support. 53,500 of the bank Nifty is important. Many of these banks don't have anything to do with foreign policy in some sense. Valuations are comfortable. Yes, there is a bit of FI selling happening there, but still there is a lot more value than many other parts of the market. So given all of that, I think the banking sector overall will come back. If the economy picks up, banking is a reflection of the economy, and I think it will do well over the next 6 to 12 months. And our working target is 57,500. So these three actually are our best bets at this point of time.
It's quite interesting what you said about metals, Gautam, and you saw a glimpse of that play out yesterday when you had Tata Steel, JSW, SAIL, etc. move with a gap up, and then, of course, some of them managed to still hold on to their gains. Tell me what within the entire metals pool is looking good, or do you think it's going to be a more broad-based move at that?
Aisha, over the last 5 years, I have seen that if you pick the right theme, even if you buy the worst performing stock in the best performing theme, you will do very well in the markets. I mean, that's my experience over the last 5 years. So I keep telling my team and I keep telling my clients, just pick the right theme and you are good. You can buy any stock. Metals, I think, are comfortable valuations, under-owned in some sense. There is a lot of headwinds which a lot of global economists and people keep talking about. But chartically, I think they've overcome just about everything. And today, everybody's talking about hard assets in some sense. And we've seen what has happened with precious metals. We've seen what has happened with copper, aluminum in the recent past, zinc, the base metal prices. So I think there is a big opportunity coming there. Many of these metal stocks are near lifetime highs. I mean, look at Hindalco, look at JSPL, JSW Steel, Tata Steel doing well, Nalco at a multi-month high. No recommendations, but all of these stocks I think are setting up beautifully. And I think metals could really be the surprise winner. In the last couple of months, the way it held out gave me an indication that there is inherent strength. And now I think with the market tailwind with it, I think it will go on to do special things.
Gautam, want your take on what the India VIX is doing right now? It's nice and quiet, but how nice actually is this quiet? Because we're very quiet when it comes to the India VIX. We're around those 10 levels. What reflection does this give of the sentiment in the market right now?
Well, I think VIX does not know what's happening in the market and what's happening globally, because had VIX knew what's really happening with geopolitics and the Trump tariff and what the government has done, it should not be at such low levels. It just tells you there is no fear in the system. There is definitely fear in the minds of people. People are a little more pessimistic, I would say. I would also say that they're a little confused with what has happened in the last 1 week. But India VIX is clearly telling you that there is no fear. And the fact that it is at levels of 10 and 11, it tells you that the market is very relaxed and seems to be preparing for a breakout. Only if VIX stays above levels of 14 would I be concerned. Otherwise, I'm reading it as a very positive development. And just to add to it, global VIX has also cooled off. US markets are doing so well, looking good for a lot more upside. You have some of the Asian markets which have broken out. So I think India will have to join the global party at some point, which has been my stand off late.
What's looking like the underperforming end? And, to my mind, it was IT up until when Infosys decided to mull on a buyback. And today, things seem to be looking differently. Having said that, in the past few months, you have seen some sporadic moves, but unsustainable at that within IT. You think IT could be that dark horse in the market?
I think it is an underperformer and it will remain an underperformer because this is a sector that has extremely high valuations. A lot of the positives of the next 3 years is already in today's price. Foreign policy, I think, is a big challenge. AI seems to be a big challenge. There is this big debate whether AI is going to impact or affect Indian IT companies, or will it be an advantage? I don't think it's going to be a great advantage with my limited understanding of things. And the market feels that way. And that's probably the reason the IT index till yesterday, was at the recent low. I think it's at a 4-month low. So I think this underperformance is going to continue. simply do not touch IT at this point of time. I think there are much safer sectors which have nothing to do with foreign soil. And in this very fluid geopolitical environment, you want to stay with stocks with comfortable valuations and with which are more inclusive to what's happening in India and not with what the world over.
Okay, Gautam, great to have you on the show. Thanks as always for joining in, and we'll continue tracking markets. And who better than Manish Shakhani, one of India's most respected market voices, a veteran